Our Market Monitor guest tonight says this is the ideal time for investors to buy small cap stocks. He's Craig Hodges, co-portfolio manager of the Hodges Small Cap Fund, which is up 8% so far this year. Craig, nice to have you back on the program.
Thanks, Susie. Glad to be on.
Well, you know, you probably hear this all the time because you manage a small cap fund. So many strategists tell individual investors, put your money in large cap stocks. They're durable, they're safe, especially in times where it's uncertain. You're obviously doing pretty well with your small cap portfolio. Make the case about why investors should buy small caps.
You know, I think in a portfolio, everyone needs some small caps. You know, there's a lot of advantages to small caps. You know, the one thing is they're very entrepreneurial in nature, and you know, sometimes their smaller companies are a lot more nimble. But the main things, you know, the main reasons that we like them is, you know, there's not that geopolitical risk that's out there that everyone's kind of a little bit afraid of right now. They also, you know, they also have a lot of advantages. With just their size, it's easier to grow a company from $1 billion to $2 billion than it is one from 10 to 20. So, and the other thing is, in this very slow growth environment that we're in, you know, big companies need new growth avenues, and of course, by getting buyouts, buying small and mid-sized companies, larger companies can grow. Last year, we had about 6 companies out of our portfolio. The Hodges small cap portfolio bought out. This year, we've already had about 5. So there's a lot of reasons to own small caps.
You make a lot of good points. Let's look at some of the stocks that you're recommending that fit those data points. The first one on your list is Capstone Paper and Packaging. The ticker symbol is KS. It trades on the New York Stock Exchange at $30. Why do you like this particular one?
Well, Capstone's an interesting company. It's in the corrugated paper, and it's like a lot of the stocks in our portfolio. We love industries that have high barriers. There's not much competition. A lot of their competition has gone away. You know, there's been a lot of consolidation in that industry, and no one's going to go out and build new virgin paper mills. It's just nobody wants that in their backyard. So with less competition, and when demand comes back and the economy comes back, you're going to see these guys' earnings go up pretty significantly, and their margins go up as well. So we think it's kind of a small name that's probably a good acquisition candidate out there. And so
it's trading at
you know,
$30 now. Where do you see the target over the next year, year and a half?
You know, I think next year or the year after next, they could earn around $3 a share. So on $3 earnings, the stock could trade in the mid-40s because it'll have, you know, at least that in growth rate. So it's got a lot of upside here.
Let's talk about your next one, Shoe Carnival, ticker symbol SCVL. It trades on the NASDAQ around $20. The stock has been falling recently, picking up a little bit, as you see here, though. Tell us what the attraction is here.
It's a name we've been involved with for quite a while, and it's been a little bit disappointing. But they're getting to a stage. You know, I filled up my car yesterday, and it's about $30 less to fill my car up than it was, say, a year ago. I think this fall everyone's going to have a little extra money in their, and so I think some of these very hated, unloved retail stocks have some opportunities. Real low expectations. Shoe Carnival is in the family shoe channel. They've got about 380 stores. We think they could take that to 700 stores over the next several years. But it's one that's been disappointing, trades at a low price, we feel like, and we think it's got probably 10, 12 points of upside over the next year, year and a half.
Okay. And the last one on your list, Matador Resources. This trades also on the NYSE. MTDR is the ticker symbol. It's trading at $27.
Yeah, Matador, great management. They're in the energy business. It's an E&P company, and they're in the Permian Basin and the Eagle Ford Shale, both in Texas. But this is a very well-run company that we think over the next several years is going to be able to make a really nice sum of money just from their expertise in this shale drilling. And as oil, you know, as oil prices, I think, will continue to be elevated, they're making great rates of return on each one of these wells, and they've got several you know, opportunities to continue to do well in this shale business. And I think it's an undiscovered company that's really underappreciated. And you know, I think that it's the kind of company over 2 or 3 years could go up significantly.
All right. Well, a lot of these are off the beaten track. Really interesting list of stocks. Thank you so much, Craig. Craig Hodges with the Hodges Small Cap Fund.